Hey everybody, how you doing? Welcome to Stock Markets with Bruce. It's Uncle Bruce here. Good morning. It's Wednesday, June the 9th, 2021. It's Gamestop Day today. Among other things, Gamestop Day today because it's the annual meeting for GameStop, and we get the first quarter financials. All of this later this afternoon. I think the financials come out after the close, which is normal. What a day we could have here. You mentioned that with the bid ask on call, sometimes 1 cent above the bid is worth a shot. Did I understand? Yes, yes. If you see a bid ask of say $5.50 to $6 for a call contract or a stock, it doesn't matter, and you're a buyer, you want in. Why should you pay six? Why don't you offer 5.51? Why don't you be willing to pay 1 penny more or a nickel more or 3 cents more than the highest buyer? So if it's 550 to 6, put in a 551 or a 552 bid if you're allowed to. If options trade in nickels, put in a 555 bid, 560 bid. Don't go right to $6. Why would you do that? If you're a seller, why would you just sell it at 550? Offer it at 599, 1 penny below be the cheapest seller, 1 penny below the current seller. You actually could be doing a favor to a market maker. It's possible that the market at 550 to 6 is a market maker and a market maker making a market on a contract. You're offering a contract of 595 or 10 of them or 15 of them. You're doing a favor to the market maker. Now market maker is not the lowest seller. There's an actual seller with real product for sale. You're doing a favor to the market. You're adding liquidity. You're putting in a bid in at 555 ahead of a market maker. You're doing them a favor. They actually don't want to buy it. They're just keeping a market. Because sometimes markets move quickly and regular investors just haven't had time to get their orders in. And so market makers make a market as an indication. And it's like a $556 indication. Last trade was 578 15 minutes ago or 575 or whatever it was. Now you're coming in at 555. There's a real bid or an offer at 595, a real offer. And you watch the market in the meantime. If you see your stock going up 30, 40 cents a share, you take your 595 and take it off the market. That sell order, you cancel that sell order and make it now 620. Because I guarantee you, if you pull that sell order out of there, there won't be a sell order at $6 behind you. The market maker will have taken that out of there and made it 625. But you're still at 595 on the sell side. You take that sell order out because you didn't get taken out. Stock is going up. You take a look and watch that market change. You cancel your order and all of a sudden you'll notice, oh yeah, it's a 560 to 625 or 565 to 625. Well, you put an order selling at 620. You get taken out there. You just got 25 cents more per contract. That's $25 a contract. 10 contracts, that's $250. Why are you giving away $250? That's first of all, that's the first smart move you made from the 595 to 620. The second thing you did that was smart is you didn't sell it at 550. Because that's what a lot of people do. Oh, I have to sell 550. That's the best price. I have to take it. They give it away at 550 when they could have had 625. That is 75 cents a share difference. $75 a contract. 10 contracts, $750. This is how professional traders get rich off of novice traders who don't know what they're doing. You gave away $750 of potential like that, and you had no idea you did it because you're going, oh, I sold them at 550. Yeah, I sold them. Yeah. No, you gave them away at 550. You didn't sell them. You gave them away. You are blowing it. You can't be doing it. Maybe the classes are for you. It's another thing I like to talk about. Anyway, thank you everybody so much for being here. Uncle B, you probably talked about this earlier about how should we expect the GameStop to react to the financials with historical drops in price after results, or we prepare for the big dip? Look, I'm waiting for a lot of clarity to come out of GameStop. I'm not looking for the surprise of a lifetime regarding GameStop. I'm not looking for like an announcement that says, "Oh yeah, by the way, we are into this business now." Not expecting that today. I'm expecting. What I'm hoping to get from GameStop today, tomorrow, is clarity on the plan, the big plan. And one of the things I want cleared up would be how many stores have you shut down now from the peak? How many more will you shut down this year? What are your thoughts? Where do you think your store count will be in the next year or two? Give me direction that way. Give me an indication. Talk about this new distribution center in York, Pennsylvania. This is exciting. I think this is great. Are there more perhaps being created? You know, how many people are you going to hire there? How big of a place is this going to be? What kind of percentage of your business do you think you're going to do through there? Any indication? Tell us about your website situation, how that's going, your e-commerce trading. Talk to us about, if you can, about this NFT stuff. What's going on with these non-fungible tokens? Fungible token. Talk to me about that. Talk to me about esports. Can you give us an indication of where are you looking? What's your? Give us some idea, because I'm excited about what I think is happening. I have my guesses of what I think is going on, but I don't want to guess. I don't want to be a guesser. I want to be someone who can say, oh, wow, that looks good. That's so. This is all right. This is unbelievable. I want to get some real info here that should be provided to the shareholders of the company. The owners of the company ought to know what their management is doing. And so I'm kind of hoping today will be a clarification day. As far as where the stock goes today, again, I don't expect the kind of news that necessarily makes the stock jump, but I'm also not going to discount the fact that maybe, just maybe, could we get a first quarter financial result that is blowing the doors off of expectations? Could we get an indication that the second quarter, which is already underway here, is blowing away expectations already? If we get that kind of direction, that kind of indication that the company's financials are really coming on, and with what they're getting into is low cost, high margin business, these shares could go much higher, because all of a sudden the community out there will go, oh, gee, they're not in trouble. They're not in any economic trouble at all. These guys are starting to make some bucks. And in the next 3 years, these guys could make 10, 15 bucks a share profit on this thing. $15 a share profit with a $50 multiple is a $750 stock. 100 PE multiple on a fast-growing company is not unusual. That's a $1,500 stock. People begin to get the impression that in 2 years, this is a $1,500 stock. It won't be a 304 anymore. So there could be that. And this is why I'm so, what's happening. Anyway, there you have it. I'm just stoked up. I'm sitting on 3,000 shares of GameStop. Should I write call contracts on all or part of them right now? How do you determine strike price? It seems like you recommend 1.2 to 1.3 times current stock price. It varies on how long the contract is going to be for. That's the thing about writing contracts. And it's different between stocks. And it's different between the owner of the stocks, depending on your age, depending on your needs. Are you looking for income to carry your household? Are you looking to add income long-term in a retirement account? Are you growing this tax-free? Are you paying tax on these gains because it's outside of a 401k or anything else? Are you in need of a capital injection of any kind in the next few months for something specific? Are you nearing the end of a loan agreement? What are your needs for capital? What's your risk tolerance level in all of this? Of course, if you've got 3,000 GameStop, you are a bit of a roller here. You got a bit of money and you are a gambler. Because you could be holding this kind of money in something else that's not quite so entertaining, as we should say. You could also take your shares, divide them into three pieces, and you could write contracts that expire this Friday, contracts that expire in like 3 weeks, and contracts that expire in 3 months. I mean, there's no end to the possibilities here as to how you're going to play this. I have some investors or viewers who say to me, at $300, man, I'm thrilled. I'm just blown away. I'm into this for $150 a share. It is 300 now. I'm like, yeah, this is great. Now what? What do I do? And I've talked to people about the idea that maybe you should consider writing options with a $500 strike price. Maybe that might be an idea. Maybe you take a third of these shares and write 10 contracts with a $500 strike price. look out to September, October, November, like I'm going out a ways, and bring in 50, 70, whatever dollars a share, as many as possible, as many as humanly possible dollars to reduce the cost factor of your stock. And if there's a dip in the market, which can happen, you're there to buy more GameStop with that money. You're just going to acquire more stock. How about that? That might be something you might want to consider. There's no one answer to this question. It's a simple looking question, and it's one sentence. Well, that's actually two sentences. No, it's three. I see two periods. It's a three sentence. There's four. This is a long question. And it's got a long answer. And so it's not so simple. You want to write October call contracts on this stock where they're $500 exercise price. You can probably bring in $65 a share or more right now on October 15th call options. Well, if you're into this stuff for $150 and you can bring in $65 right now, you've just reduced the cost of your stock to $85. You've reduced your risk to $85 a share. Yet you're offering them for $500, which is $200 higher than where they are at, daring the market to, well, you can take them off my hands between now and October for $500. That gives me $565, by the way, if you sell with that premium locked in. You've got a $565 sale on a $150 purchase. That's a $415 gain on your shares on however number of contracts you write. You can do it with all 3,000 if you want, then just, forget about it. Just go, I'm just going to do it, and I don't have to worry about it. But you could also play the game of, no. I'm not going to do that. I'm going to write contracts that expire in July this month. And I'm thinking about offering July contracts maybe that will be, let's say just ahead of the market here. Let's take a look here. July the 9th, maybe we'll write 350s. Well, you can bring in $50 for those. That's $400 to you if you get taken out by July the 9th. That's a month from now. On the other hand, you write 450s, you can bring in $35. And if they don't reach 450, that 35 is your money, and you can write again. You can write more contracts. You've got a lot of options here. Uncle Bruce, I have cash for one of two choices. I can do one of two things. I can buy 5 Gores Holdings $20 call contracts for February 22 at $1.95, or I can buy 5 FAII 1250 calls November 21 at $1.95. It's the farthest the shares, these contracts go for FAII November. I'm leaning on Gore. I'm leaning towards the Gores Holdings than the other one. What do you think? Well, I like the timing. I like that I like that February timing. Excuse me, I'll get it right. FEB, February. I like going February on your contracts, and on Gores. I like it, but I do like that 1250 call strike price on the FAII. So you're a winner either way, and so govern yourself accordingly. But I like how you're thinking here. I like how you're sort of, yeah, that's right. This might be one way to go. First time buying Leaps got 2 SoFi calls, January 2023, 1250s and $15 strike prices. Should I bother watching with such a long time frame? Or do I sell them if SoFi pops up a bit higher or whatever? Well, SoFi get into that $30, $40 range, you will be kind of smiling right now about how you're doing on these. But, you got all the time in the world right now to let these do their thing. This is the kind of, this is the kind of investment you can make where you can hang on for a while. And, you can go 6 months, 8 months, a year. A year from now, SoFi, they're at $80, $100 a share. You're doing all right. You're going to say 2 calls. I should have bought 20. I should have bought 200. What was I doing? Only buying 2. But it's so good. It's all good. I have SoFi, VGAC, Gores, VACQ, limited cash. So which SPAC should I buy next based on merger dates and momentum? I think it's FAII. That's the next one. That's next week. They have their meeting in 6 days. Shareholder meeting, 6 days. If they do decide to make a split on GameStop, will they have to file and make an announcement? Wouldn't they have to do that, right? And then will it be on today, or will they make an announcement later? If they were to make an announcement on the split, they would likely do that tomorrow or next week, not in today's annual meeting. Because in today's annual meeting, they're only going to talk about what you voted on. That's all that is on tap for the annual meeting. That's really pretty well that's what's going on. We'll figure out what's going on. Later today, when they come up with the first quarter financial, they could theoretically say, here's our first quarter financials. Here's what we think is going to happen with the company. Oh, and by the way, we're splitting the stock 10-for-1. Effective 3 weeks from now. They could do that. I don't think they will, but they could. How do you actually get out of a call contract that you write, that I wrote? Do you just buy another call contract at equal value to set it off? So yeah, if you wrote let's say you wrote a GameStop contract or an AMC contract, say you wrote an AMC $55 contract, and you want to get out of it, you can just buy back an AMC $55 contract for the same strike, obviously the same expiry. When you're in your brokerage account, when you're in it, you'll see your stock positions and your option positions. Your option position should be showing a short position at your -1 or 2 or 3 or however many you wrote. And there probably will be a buy button next to buy to close button in the neighborhood of that quote, where you can put in an order to buy to close that actual contract, that series, and it'll tell you what the market is. You decide, well, I wrote it at 15 and it's now trading at 5. I'm going to buy them back at 5. You put in your bid or ask, and when you put in your price, and I say, put in a price that's closer to the bid, not near the offer, because sometimes the spreads are pretty high. And yeah, that's how you do it. Absolutely. And then you're off the contract, and you can turn around if you want anytime after that and write a new contract for a later date, a different strike price, whatever works. Absolutely. If the call contracts are in the money, are you obligated to sell your stock? Okay, if you wrote a call and your stock goes up in value into the money, where you wrote your call at, you could be exercised. So yes, you're liable. It's possible that you could be exercised on your stock where you'll be bought out. So if you write a GameStop contract for $350 and the GameStop shares run up to $360, it's possible that you get a $350 per share check or deposit in your account, $35,000 for every 100 shares. So if you wrote 10 contracts, you would get $350,000 deposited in your account instantly, and you won't have the stock anymore. Of course, the $20,000 or whatever dollars $200,000 you brought in, or whatever the amount was, I can't remember. However you sold, however contracts you sold for whatever price, all that money is already sitting there. If it's $20 a share, you actually sold for $370, and if they're trading at $360, all you do is you just buy the stock back at $360 on the open market. You turn right around and now start writing $420 contracts and keep doing it. Tell them, let them keep taking you out at $50, $60 every time, and make a ton of money. Get rich. Is this a good time for the market? What could cause the entire market to dip? Well, space aliens invading the planet without announcing it. Slim Whitman taking over the airwaves nonstop could cause markets to drop. Just that noise, having every radio station simultaneously in the United States, AM and FM, having a Yoko Ono marathon for the entire long weekend, that could cause stocks to go down in price. It's the end of the world. These are the Armageddon things we think about. But space, Ray, hey. We like SPACs. I like a few of them. I've mentioned them, and some of them are up and some of them are down, and you got to let it happen. Can I get a list of your SPACs? I will screenshot it. The SPACs are here. Just 1 minute. I've got to make one edit change. First of all, and let's do that. No, not that. Let's do this right here, and I'll go right here. And we'll do this. Okay. And then we'll do that. And then we'll do this. There they are. Now this is updated. So we have VGAC, Gores Holdings, SVAC, FAII, FACQ, NSH, Sofi, which was IPOE, but it's now Sofi. It's not a SPAC anymore, but it was one of my SPAC. FWAA. All right.
Does it look the same? And see how with bagel you have like these little bubbles, so they're like little extra bombs of jelly in there for you? There you go. Okay, let's have a taste. See what you think. Smell it first. Smell. Yep. Oh. He's got to push back.
Getting kind of excited. We got us a bagel with Welch's grape jelly on it from America.
Oh, it's been months since you've had Welch's. What do you think? Oh, okay, yeah. Breathe it in. Get all your senses in there. Okay, Master Chef, what do you think?
Lovely. Lovely.
So I don't need to take it away.
Thank you, everybody, for that. If you'd like to talk to me about a 1-hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.